The profit of the firm is what in this question?
12,600.
The question number 3.
Yes.
It is 12,600.
Yes. You will see here
Okay, sir.
12,600.
Okay, sir. Got it.
It is given in the question actually.
And so what is the meaning before all above adjustments were?
Okay. Okay. So the line is saying that in the question there are some adjustment given. Yes.
Yes, sir.
And before adjusting those items, your profit is 12,600.
Okay, sir.
So in this profit, interest on capital is not adjusted and interest on drawing is also not adjusted. That's why it is written the profit of the firm for the year ended 31st March 2011 before all adjustment were 12,600.
Okay, sir.
Is there any other doubt?
No, sir.
Okay. So we have done our question. Profit and loss appropriation account. Let's discuss a new topic. After that, you will able to prepare capital account and pass the journal entry. Okay, so the concept of journal entry first, and then I will tell you the partners capital, how to prepare partners capital. Okay. So we know the concept of this old and new rule. You know, you remember these rules.
Yes.
So first of all, for transfer of net profit from profit and loss account to profit and loss appropriation. Okay. So for transferring the journal entry from profit and loss account to profit and loss appropriation account. Okay. Can you tell me what will be the journal entry?
Not getting it, sir.
You are not able to do it?
Yes.
Okay. So the first of all, we are transferring our profit from profit and loss account to profit and loss appropriation account. Okay. So the journal entry will be profit and loss account debit to profit and loss appropriation.
Okay, sir.
Okay. And what if there is loss?
I think it will be reverse. It will be credit.
Okay. It will be reversed or opposite of the current entry. Yes. This you can see. Both the entries are given here. Journal entries for transfer of profit or loss from profit and loss account to profit and loss appropriation. So for profit, it is profit and loss account to profit and loss appropriation account. And for loss, it is profit and loss appropriation account to profit and loss. So yes, it is just opposite of first entry.
Okay, sir.
Now, After this, after transferring these entries, we have to pass journal entry for interest on capital, interest on drawing, salary or commission, and transfer to reserves. And if there is any balance, then we distribute it between partners. So second entry is interest on capital. You can see here, interest on capital due. First entry will be interest on capital due. So interest on capital is expenses for us, yes?
Yes.
Or income?
It is income.
It is income or expenses?
I think it is expenses because we have to give to the employee.
Yes, we have, no, not employee, we have
Partner.
to give it to the partner, yes.
Yes, partner.
So partner is investing their money into business, so we have to give interest to partners. That's why interest on capital is expenses, or you can say appropriation. So in expenses is debited as per rules of nominal account. Yes.
Yes, sir.
So interest on capital account debit to partner's capital. Actually, we never pay to the partner in cash. Okay, whatever the income or expenses, whatever our transaction is with partners, we generally credit it or debit it in the partner's capital account. Okay, so their capital will increase or decrease.
The capital. Okay, sir.
So interest on capital is expenses for the firm, but it is income for the partner. Yes.
Yes.
So if we credit it, if we don't pay it in cash and we will credit it in partner's capital account, then partner's capital account will increase.
Okay, sir.
Okay, so partner's capital account is credited here. There is two rules. You can apply any of these two. The nominal okay, the nominal account. So as per nominal account, interest on capital account is debited. Okay, or if you take income, expenses, capital, then capital increase on the credit side. Yes.
Yes.
Capital increase on the credit side as per new rules. So that's why partner's capital account is credited here. Okay, the second entry is for write-off. If you know the concept of nominal account, you will understand this, that there is no balance carry forwarded from nominal account. You know this concept?
Sir, can you repeat?
Okay. There is no balance carry forwarded to the next period for nominal account.
No, sir, I didn't hear this.
Okay. There is three types of account, you know, real, personal, and nominal account.
Yes, sir.
In real account, we use the assets or things that we use in business. So like I'm using this furniture right now. So this is the real account. At the end of the year, it will be carry forwarded to next year, because at the end of the year, it will not be finished. Okay. There will be some balance in furniture account. Yes or no?
Yes, sir.
That's why real account is carry forwarded. Same with the personal account. If we have to receive money from someone or we have to give money to someone, then at the end of the period, it will be carry forwarded to next period. It is not like that we don't have to pay money after 1 year. Yes.
Yes.
So personal account is also carry forwarded. The next or third is the nominal account, which is expenses or income, profit or loss of the business. So generally income and expenses is related with certain period. Okay. And we cannot carry forward the income or expenses to the next period. Yes.
Yes, sir, got it.
Okay. So that's why all the expenses or income is written off in current year. It is not carry forward.
Okay, sir.
Okay. So in this portion, you can say, see, the interest on capital is expenses for the business. So we have to write it off in current year.
Sir, can you repeat?
Yes. The okay. So the interest on capital is related with current year. Yes. So we have to write it off in current year. So you can see interest on capital is first we have to pass journal entry of interest on capital due, and then we have to write it off in current year itself.
Okay, sir.
So we write it off by profit and loss appropriation. Okay.
Okay, sir.
We can pass a single journal entry for combining these two entry. Actually, you can see how to combine entry. You know this?
Yes, yes. From what I remember.
Okay. Can you tell me how to combine this entry?
Uh, I'm not able to do it.
Okay. You have to see that in if there you have to combine two entries, then you have to see that there is a common account in both entries. Okay. So is there any common account in both of the entries?
Interest on capital.
Interest on capital. So in the debit side, interest on capital, in the credit side, interest on capital. So we can remove this. Okay.
Okay, sir.
Because it is like plus or minus. So the same amount is on the debit side, same amount is on the credit side. So we will remove this item. Okay.
Okay, sir.
After that, there will be profit and loss appropriation account, debit to partners capital account. Okay.
Okay, sir.
So this is how we can combine journal entries. Okay, so all the expenses, either interest on capital, salary, commission, or interest on drawing, these items will be written off in current year itself. It will not be carry forwarded to next period. Okay.
Okay, sir.
Okay. So if you want to write this, you can. Please write.
Sir, interest will come in expenses.
Interest is
Interest always comes in expenses.
no. If interest is received, then it is income.
Okay, sir.
Like when you invest money, when you deposit money into bank, okay, so then you will receive interest from the bank.
Yes.
This is your income. And same in the interest on drawing, when partner is withdrawing money from the firm, then they will pay interest to us. In that case, interest on drawing is income.
So here for interest on capital due means
Interest on capital due means the time has come to pay them. Okay.
okay.
Like at every month end, rent is due. Okay.
Yes.
But we generally pay after 5, 7, 10 days. Yes. So
Yes.
payment can be done later, but it is due on 31st. Yes.
Yes.
So this is what this is why we pass the journal entry for due.
And write-off means removing.
Yes, write-off means we will transfer it to some final account. You can say trading account, profit and loss account, profit and loss appropriation account.
Okay, sir.
These are the components of final account. So we have to transfer it to final account, which is a nominal account. We cannot transfer it to the balance sheet. Okay. So we have to transfer it to a nominal account.
Okay, sir.
Because profit and loss account, profit and loss appropriation account, these all are P&L.
Okay, sir.
Okay. Is there any other question you have?
No, sir.
Okay. Now, in this part, salary or commission of partner, it is also expenses for the business. Yes.
Yes, sir.
Okay. So we have to pay salary or commission to partner. So first entry is same for salary or commission of partner due. Okay. So at the end of each month, their salary will become due. So we have to pass this entry: partner's salary or commission account debit to partner's capital account. And for write-off salary or commission of partner, profit and loss appropriation account debit to partner salary or commission. Now, if you want to combine this entry, what will be the journal entry combined?
P&L appropriation account debit to partner's capital account.
Same as the previous one.
Yes.
In previous entry also, the combined entry was profit and loss appropriation account debit to partner's capital. Okay.
Yes.
Because partner salary and salary on the debit side and credit side, it will be removed. So profit and loss appropriation account debit to partner's capital. Understood?
Sir, debit means money is going from us, right?
Debit means expenses for us.
So that
So,
means money is going from us to the other person.
yes, but if it is a real account,
Real account means it's coming to us.
yes. In real account, debit means debit what comes in, credit what goes out.
Yes.
So if it is a real account, then it means it is coming to us.
Okay, sir.
So actually the rule changed on the basis of their account. That's why.
Okay, sir, got it.
Okay. So partner salary is a nominal account. That's why it is expenses and up to debit card. The next one is interest on drawing. You can see here interest on drawing. First entry is for due, partner's capital. The entry is reversed here. You can see interest on drawing is on the credit side for in first entry, and interest on drawing is on the debit side of first.
Sir, can you repeat?
Sorry. Actually, interest on drawing, you can see here. Yes, interest on drawing. It
Yes,
is
sir.
on the credit side of first entry, and it is on the debit side of second entry. Yes.
Yes.
Okay. So if we combine this entry will be partner's capital account debit to profit and loss account.
Yes, sir.
Okay. So it is reversed now because interest on drawing is income for the firm.
Okay, sir, got it.
Okay. The next is for transfer to reserve, profit and loss appropriation account debit to reserve. Actually, there is no due entry in this because reserve is not an expenses or income. Okay, so there is not a certain time that reserve will be due. Okay.
Reserve means storing and keeping the money.
Yes, for any future uncertainties.
Okay, sir.
Okay, so for transfer to reserve, profit and loss application account debit to reserve. Now, after passing all these entries, we have to calculate the balance of profit and loss appropriation account, which will be transferred to capital. Okay, so
Okay,
the
sir.
next entry is for distribution of profit or loss. You can see here profit and loss appropriation account debit to partners capital for distribution of profit, and partners capital account debit to profit and loss appropriation account for distribution of loss. Okay. Now, if there is 3 partners, then you have to write name of each partner. Like if we are passing journal entry, then our entry will be profit and loss appropriation account debit to A capital, to B capital, and to C capital. Okay.
Here, this means the profit is being distributed between A, B, and C.
Yes. And how we will distribute the profit? It will be given to distribute like this when we calculate balance. So the balance amount multiplied by profit share of each partner.
That ratio.
Yes. If the ratio is 3:2:1, then first we will multiply by 3/6, then 2/6, then 1/6 for A, B, and C. And then the amount calculated here will be written here.
Okay, sir.
Okay. So here I am writing partners capital only, but you have to write the name of each partner separately.
Okay, sir. Got it.
So profit and loss appropriation account debit to partners capital and partners capital account debit to profit and loss appropriation. Clear?
Yes, sir.
Okay. So after this, there is a concept of capital account. Okay. You told me that you have studied this chapter. Yes.
Yes, sir.
Okay. Can you tell me the methods for preparation of capital account?
Capital account. I don't remember, sir.
Okay. So capital account is prepared by two methods. The first one is fluctuating capital method. The second one is fixed capital. Okay. Now,
Okay, sir.
what is the difference between these two? So let me write this. Fluctuating capital method and fixed capital. So in fluctuating capital method, the concept says we write all the items which is related with partner in one account. Okay.
Okay, sir.
So we like whatever the transaction amount is, we don't consider it the by amount. Okay. We don't consider the high or low amount. We take all the amount, put it in a single account. Okay. So if there is a small transaction or big transaction, it will affect our capital account. Okay. So there is only one account prepared under fluctuating method, and we put all the adjustment in this account. But in fixed capital method, two account is prepared. One is called capital account and second is called current account.
Okay, sir.
And here only capital. Okay. Now, why two account and one account? I told you we put all the adjustment in one account here. So it is created due to the deficiency in first method. There is some, you can say, problem with first method. And what are these problems? We have to know it because we are preparing capital account, current account. So why we are preparing it? First is in capital account, fluctuating capital account method, we don't know the capital balance after 3 or 4 years. Okay.
Okay, sir.
Because all the items you adjust in capital, let's take an example here. Let's say in 2018, there is two partners, A and B. They have invested 3 lakh into business and 2 lakh into business. Okay. So their investment is this. Now we adjust profit here. We adjust interest on capital here. We adjust drawing here. So we adjust every items in capital account. Now, after let's say 3 years, the capital balance will change by these amounts. So it will become, let's say 2 lakh. I'm not adding or deducting these. I'm just assuming the 2,30,000. And the value of B capital is 2,10,000. Okay. So
Okay, sir.
after 3 years, if you want to know that how much capital was invested by A and B, can you know it?
No, sir.
No, because the A capital is now become 2,30,000 and B capital now become 2,10,000. You cannot find out that how much capital is invested by A and B without seeing the previous books. The 3 years before the books we have prepared 3 years before. So we have to see that book. Yes.
Yes, sir.
That's why this is the big problem for the firm, that we don't know the actual amount invested by the partner. So we started to prepare 2 accounts. Okay.
Okay, sir.
Okay. Now there is 2 things again, like interest on capital. Generally, we calculate interest on capital on the opening balance. Okay. Now in fluctuating capital method, it will change every year, the opening balance. Okay.
Okay, sir.
So we have to calculate interest on capital on the new amount every year. So this is also a small problem. Okay. Now we have to remove these problems. That's why we started to prepare capital account by fixed capital. Okay. Now, when we prepare fixed capital, then there is 2 accounts, capital and current. Now we write the opening balance here in capital account. Any additional capital introduced is also written here. And if there is drawing of capital, only drawing of capital, then we will write in capital account. Only these 3 items are written in capital. Now, if you understand the concept of a business, generally additional capital introduced and drawing of capital is a rare item. It is not done frequently.
It is what, sir?
It is not done frequently. Additional capital is not introduced in business frequently.
Yes, sir.
Okay. Also, the capital withdrawn is not done frequently.
Yes, sir.
Okay. So these 2 items are occasional. It happens in 5 or 6 years or 10 years like this. Okay. So that's why our capital balance stay fixed. It will not change.
Okay, sir.
But when we prepare current account, we put all the items like profit of current year, profit or loss, you can say, profit or loss of current year, interest on capital, interest on drawing, salary, and let's say the drawing, if made drawing of profit. Actually, drawing is of 2 types. One is drawing of capital and the second is drawing of profit. Okay. So drawing of profit will be written in current. Is this clear?
Yes.
Now, all these items that is written in current account, you can see that profit and loss will happen in every year. Yes.
Yes.
Interest on capital will be paid in every month.
Yes.
Interest on drawing is also the same item. Salary will be paid in every month. Drawing of profit will be in every year. So these are frequent items. Okay, it happened again and again. So if we put all these items in a single account, then it will change our capital all the time. Okay, so in a year, in 1 year, there can be a change in capital 5 times, 6 times, or 10 times, you can say. Yes?
Yes, sir.
So that's why we prepare current account. Now in this method, fluctuating capital method, there is one account only, and all this item and this item are written in that account. Yes?
Yes.
Now you can understand the effect. It will change our capital all the time. Yes?
Yes, sir, it will change.
Yes, that's why it is called fluctuating capital method. Means our capital is keep fluctuating. And in fixed capital method, our capital is fixed and current account keep changing.
Got it, sir.
So this is why we prepare our capital account and current account in by these two methods. Okay, so you can see the format here. Fluctuating capital method. In this method, only one account is prepared and all adjustment or items related to partners are recorded in a single account. Therefore, capital of partners keep changing. That is, partners' capital balance is fluctuating. You can see all the items written here
Yes, sir.
in single account. You want to write this, copy this?
I'm taking a screenshot.
Okay, good. So this is our fluctuating capital method. This is how we prepare the balance BD. You know the concept of balance BD?
Yes,
I
sir.
think yes. It is opening balance of capital.
Yes, sir.
And after that, cash, additional capital, interest on capital, partner's salary or commission, profit and loss appropriation account. You can see here to balance BD also given. Means if there is negative balance of partner's capital, then it will be written on the debit side.
And if it's positive, you come on the credit side.
Yes, then it will be credited.
Okay, sir.
Because if we go by concept of new rules, the modern approach of accounting, then capital account always have credit balance. So generally, there is no negative balance in capital account, but sometime maybe it will be given in quotient, then you have to write this. Okay.
Okay, sir.
So generally, capital account have credit balance only. Now, to drawing, interest on drawing, profit and loss appropriation account. If there is a loss and if there is a profit, then profit and loss appropriation account on the credit side. And after writing all these, you have to calculate balance. Balance can be on the debit or credit side. Okay.
Okay, sir.
So this is our fluctuating capital method. But
Sir, how
there is
to know that interest on drawing will come in debit side and interest on capital will come in credit side?
okay. Okay. So tell me one thing. If you are paying interest on capital, capital will increase or decrease?
Till on capital will increase.
If you are paying interest on capital, yes, then amount will be received by partner. So it will increase their capital. Okay.
Yes.
And if we pay interest on drawing, then it will decrease the capital of partner. Okay.
Yes, sir.
And as per the rule, capital account increase on the credit side and decrease on the debit side. So whatever the item written on the debit side of capital account, you can see these items are reducing our capital balance. That's why these are debited. And these items are increasing our capital balance. That's why these are credited. Okay.
Okay, sir. But
So you have to see the impact on capital balance. If it increase our capital, then it will be credited. And if it decreases our capital, then it will be debited.
okay, sir.
Okay. After this, So this is our fluctuating capital method. Now fixed capital. In this method, capital of partners are generally fixed and changed only if there is a drawing of capital or additional capital introduced. I told you only two items go to capital account, additional capital and drawing of capital. You have to remember this. Drawing of capital will go to capital account and drawing of profit will go to current account.
Drawing on profit will go to current account.
Yes. Drawing
Okay,
of profit will go to current account.
okay.
Yes. Now, how we will decide that the drawing given in question is drawing of capital or drawing of profit?
I think it will be written in the question.
Yes, sometime it will be given, but sometime not. Okay.
I'm not getting the answer.
Okay. Sometime it will be given, so you can write it, and sometime there will be no information about drawing. It is simple drawing written in the question. In that case, you have to assume that it is drawing of profit.
Okay, sir.
Okay, you can see in partners capital account debit side, I have written drawing of capital.
Yes, sir.
But in partners current account, I have not written drawing of profit. It is simple drawing account. Yes.
Yes, sir.
This is the reason why I have written like this. If question will give you drawing of capital, then it will write drawing of capital. But drawing of profit will be written as simple drawing.
Okay, sir. Okay.
Okay. So that's why I have written like this. Now, by balance BD, additional capital will be on the credit side and drawing of capital on the debit side. After that, we will calculate balance. And all the other items are written in current account like salary, commission, profit, loss, interest on capital, interest from drawing of profit. These are written in current account. After that, we can calculate balance. Now, you have to remember one more thing, that partner capital account under fixed method always have credit balance.
Okay, sir.
Should I repeat this?
No, sir. I understood.
Partner capital account always have credit balance on the under fixed capital method, and current account can have negative balance also. Okay, so the negative impact of capital account is removed to current account. Now our capital account always have credit
Credit
balance.
balance. Okay, sir.
So this is one more deficiency, because capital should not be in negative. If you have introduced money into business, your capital should not be negative. Yes.
Yes.
Yes. So actually, there is a concept related to this negative balance of capital account. You will study in higher class. Actually, there is a case study, Gardner versus Murray. If you will search this online, you will find it. Gardner versus Murray concept. It is based on the negative balance of partners' capital. So that's why we remove this deficiency by preparing partners' current account under fixed capital method. So this is our capital account. Now let's see a question. Okay. Only profit and loss appropriation. give you a question. Okay, do you have T.S. Grewal book?
No, sir.
Which book you use for practice?
Double entry.
No. Actually, I'm asking the writer's name in your book.
Writer's name. Like it's not a guide. The name is
Double
double
entry
entry.
bookkeeping, it is written. There is a writer name on every book. Actually, it is CBSE book,
Yes, sir.
NCRT.
Yes, sir.
So there is very less question in that book. It is good for theoretical purpose, but you cannot practice more question from that book. Yes.
Yes, sir. I had one more book, but I don't know where it is. I have to find it.
Actually, for practice, you need some other book also, so that you can solve more questions. Actually, it is only profit and loss appropriation. Okay, I will share this. Yes, it should be credited to the capital account. This is also profit and loss appropriation account. Okay. Here is the question. I will explain the question to you. And then please try to solve these questions. Okay.
Okay, sir.
Sharing. Okay. So you can see the question here.
Yes, sir. I can see.
Okay, so there is different question of capital account. You can see question number 45 here. Sajal and Kajal are partners sharing profit and the loss in the ratio of 2:1. On 1st April 2015, their capital was Sajal 50,000, Kajal 40,000. Prepare profit and loss appropriation account and the partner's capital account at the end of the year after considering the following items. Interest on capital is to be allowed at the rate 5% per annum. Interest on loan advanced by Kajal for the whole year, the amount of loan being 30,000. Interest on partner's drawing at the rate 6% per annum. Drawing Sajal 10,000, Kajal 8,000. 10% of the divisible profit is to be transferred to reserve. They earned profit of 70,260 for the year ended 31st March 2016. Now, first of all, we have to prepare profit and loss appropriation account. You will write this profit you will write this profit of 70,260 on the credit side of profit and loss appropriation account. You will write on the debit side interest on capital, and interest on drawing will be credited in profit and loss appropriation account, and 10% of divisible profit transferred to reserve, it is also debited in profit and loss appropriation. Okay.
Sir, this D I didn't understand.
D.
Yes.
Yes. After deducting all the items, actually divisible profit means you have to calculate the amount of profit which will be distributed between parties.
Okay, sir.
Okay. You can see here that interest on a loan advanced by Kajal for the whole year, the amount of loan being 30,000. Yes.
Yes.
Now interest rate is not given for this loan. Can you tell me what will be the interest rate?
I think it will be 10%.
10%. So 10% as per you, 10%, the amount will be 3,000, but 10% is incorrect actually. When there is no partnership deed or there is no provision in partnership deed, then interest on loan is to be paid at the rate 6% per annum.
Oh, okay, sir.
You remember the concept of when partnership deed is not available?
Yes, sir. I remember now.
Okay. So that's why we have to distribute, we have to give 6%. So the interest will be 1,800, I think. 30,000 into 6%, it will be 1,800, 1,800. Okay.
Yes,
Now
sir.
you will deduct this 1,800 from 70,260. Let me calculate 70 to 60 minus 1,800. Okay. So it is 68,460. This is your actual profit. Okay. So it will be written on the debit side. Oh, sorry, on the credit side, 68,460. On the credit side of profit and loss appropriation account. You will start preparing your appropriation account with this amount, not 70,260. Okay.
The appropriation account will start with 68,460.
Yes, because interest on partner's loan is not an appropriation. It is charge. So first we deduct charge, all the charge, and then the balance amount is written on the credit side of profit and loss appropriation.
Okay, sir.
Okay, so first we have deducted this interest on loan, and then the balance amount is written on the credit side. After that, you will add interest on capital at rate 5% per annum. It will be 50,000 into 5%, 2,500, and 2,000. 4,500 will be added. Sorry, 4,500 will be debited as interest on capital. Okay.
Okay, sir.
This amount, because 50,000 into 5% and 40,000 into 5%.
Okay, sir.
After that, interest on partners drawing 6% per annum, drawing Sajal 10,000, Kajal 8,000. You have to calculate interest on this amount also, and you have to write this amount on the credit side of profit and loss appropriation account. Okay.
Okay, sir.
So let me check it. 68,460 minus 1,500. Okay. And plus 6%. So it is 6,500. 300 and 240. Yes, 540. 540. Okay. This will be on the credit side. 540. How we got 540? 10,000 into 6% into 6 by 12, and 8,000 into 6% into 6 by 12. Okay.
Okay, sir.
Why we are calculating the profit, sorry, interest on drawing for half year?
Because I think it is during the year.
Yes, it is during the year, that's why. Okay, so please try these questions. All these questions, actually, you can solve these questions. Okay.
So interest on partner's drawing means partner is taking the money from the firm and then paying the drawing
The
with the
interest.
interest.
Yes, yes.
So the partner is paying us the interest to the firm.
Yes, partner